15.1. Let's run the VIX numbers. Looking at a 0.95 percenter, potentially higher, lower. New levels to watch. Futures down a little bit. This is down like 0.2% this morning. I feel like this had a bit of a comeback. Let's go check on futures this morning. Anything in the last, yeah, so we had about a 8 to 10 point rally in futures for the last hour or so. We are trading below the weekly VWAP. All right, let's see. So I'm seeing a negative gamma here until price gets back above 64.50. Inefficiency from Friday. And then hopefully highs that will not come back above like 65. But I'm going to try to sell as high as possible, 70, 75, 80. Maybe this negative gamma environment is going to still like produce higher levels, or trying to, maintain this bullishness. But it's kind of easy to slip away into open space. If we break below 64.40 today, there's not much stopping this just based on that Friday inefficiency. So I can see if it holds here. I mean, we saw a lot of intraday support around that 64.40 level. Then that gave back. Friday we pushed all the way back up. Yeah, so 64.40, pretty key level on the support side for intraday pricing. If we break that 40 handle, then we're going down probably to 64.10. So again, high 64.80. Let's bring up the chat. Say good morning to everybody. All right. Daily profits plan. Good morning, traders. All right, who's in the house today? We have Sandy here, Catherine's here, Mark, good morning, Walt, good morning, Greg, good morning, Dr. Barnes, good morning, Dan, Vladimir, Rick, what's happening? Nice to see everybody. Okay, so bigger level is the 64.40. Let's check and see a couple different time frames here. I'm going to go 0 DTE as well as 3 to 4 DTE. Let's have a look. So this 64.40, if we break it, we can certainly, like I showed in the other chart, chew into this inefficiency candle from that 10 o'clock announcement on Jackson Hole with Powell. This is all 0 DT. So here is pre-market. Pre-market, not much to the upside, which is kind of nice if we just stay here in the middle. That also makes sense with a video that I sent out yesterday. I posted a video in TradingView yesterday after the close, and looking at NVIDIA here, okay, opening up a little bit higher, but as we have earnings on Wednesday, high, low, and price is kind of sitting right in the middle. It's a perfect earnings play to kind of make both sides lose, right? If you're looking for direction, you're just maybe not going to get it, or you get both. It gaps higher and then fades, or it gaps lower than rips. I'm not sure. So just kind of starting from that position. If it goes up into earnings, there could still be a big, blow off gap. I still think that gets faded. But, anything for the month of August to kind of finish at the highs. We're right there now. So, I mean, we only have a few more days left. Friday's the 29th, final day of trading for the month. Are we going to cling to these levels? So far, the monthly candle is right at these highs. And this is big turnaround April, May push, June, July, August, all more of the same. Okay. Which still just kind of adds more evidence that we're probably going to see some type of pause or pullback coming September, October. I mentioned this in the video yesterday. I'm trying to think if I can find let me post this in Telegram. Did I post it yesterday? I posted an NVIDIA chart, and let me post the video from yesterday. So this is in my analysis section. Yeah, there. So coming in Telegram right now, video link. And some extra commentary. There we go. So I posted this video yesterday. It was yesterday at like 4:30, 5 o'clock Eastern time. But little video, price action, NVIDIA earnings, US GDP is on Thursday, unemployment claims on Thursday, PCE on Friday. NVIDIA is a large portion of the S&P right now with $4+ trillion. I think it's right now the only company that's still hanging out over $4 trillion. So yeah, all eyes on NVIDIA. It's going to move the market. We'll see whether or not we're moving from, the all-time highs or we're moving just a little bit lower. We started off the week red. We did the same thing last week as well. Red week, or red on Monday, a little bit softer. Tuesday was a sell-off day. Wednesday was a sell-off day. Thursday was chop. Friday was a rip. So intraday support and resistance, bigger range, resistance and support. Yeah, I mean, is Tuesday the day that we go to all-time highs? I don't know. I don't think so. So, will Pinch Point Masterclass be in Telegram? The link for it will be just to join. It's going to be in your classroom, Greg. So your 1:30 p.m. Pinch Point class today. So Pinch Point, 1:30 p.m. masterclass. That's 1:30 p.m. Eastern time. We'll start that session. It'll be a Zoom link. You can get inside your classroom. Yep. Okay. So let's go SPX this morning. Ivy ranked down to 11.1. That's a little bit lower than we've seen. We saw like 14, 15, 16 going into Jackson Hole last week because of that big smash on the VIX. Ivy ranks down a little bit. So market maker moved today around 20 points. Gosh, it's just so low, dude. I'm saying that because we're trading around, 64.40. I want to sell at 80, and the market maker move is only 20 points. So to get the type of premium that I want, you can see my levels, right? 55, 60, and 65. I'd like to sell those, but I will be disappointed if price runs up to them, So I think today, trying to think. Let me see what the deltas are this morning. So if we start off around 64.40, futures is basically flat. So we're going to open up roughly where we start. 0.95%. The VIX is at 15.28. Oh man, that's just so bad. A plus or minus 20 it's nothing. I mean, last week we saw multiple trading days. Let me go to the charts here. Plus or minus 20 something. The market surprised that pretty much all week, right? Monday was like a really chill day. Tuesday started to roll over. So, plus or minus 20, it stayed there all day. Tuesday, it did not. Wednesday, it did not. Now it stayed there for the close of the day on Wednesday, but we had a lot of volatility intraday, like down 40, 50 points, back up 40, 50 points. Thursday, somewhat contained, but that was all in anticipation of Jackson Hole, which blew through that plus 55 that we expected to see on Friday. So that's my beef with a plus or minus 20 on the market maker side is it shows 20, but their job is to maintain those guardrails, and if they don't, this is where volatility comes in a negative gamma environment. There could be prices falling, and buying, but it's just more volatility. So it becomes increasingly frustrating if price, bottoms out here and then goes higher. Remember, VIX at 15, we could go 0.94% from some type of intraday low to high. So I don't know. I want to sell as high as possible. It's that simple. So if I start lining up call sides here, 55, 60, and 65 start lining up sell calls, price can absolutely hit them today, you know? And if we're going to make some silly attempt to come right back up the highs, I don't want these trades all to be threatened. So anyway, we'll see what, further out of the money puts look like. The put premium's been a little bit juicier than the call side. So let's see how low we can go, perhaps. Let's go 0.9. I mean, that puts us up to all-time highs. I don't think we're going to get there. Just the premiums are so bad beyond like 20 points. It's like 30 points. I'm probably getting less than $1 on a 5 wide spread, which I obviously want at least that. I mean, I like to make at least 1/3 of the width if I'm doing a credit spread. 0.95 is around 6,500. That's based on yesterday's close. Okay, and then 0.95 to the downside. 63.80. Yesterday's close. Okay, 63.80 in here. Okay. And again, because we have NVIDIA tomorrow after market, maybe things are relatively contained. Just going to try to pick some good levels and manage risk and see what we have. Okay. Hannah says, can you contact me after the session since I missed yesterday? For contact you for what particular session? I mean, if you're coming in daily profit play, just keep coming. Any particular like education you're looking for, Hannah? I mean, daily profit play every day, weekly waterfall. We did that at 12:30 p.m. Pinch point, we're having a masterclass this week. I ran a YouTube session yesterday, and I am going to continue to comb through my Project Options Edge trades. Closed out trades on Apple, Robinhood, Palantir, Dell, PayPal, Altria, and Airbnb for profits yesterday. Each account grabbed about $1,670, plus or minus. It's probably closer to $2,000 because I had some more contracts in some of those trades. But just on a one contract closeout, that was a pretty good chunk, and I should be getting back some buying power. So I need to do that today as well on some of the other accounts. Trump cabinet meeting news conference at 11. Okay. Is it on the calendar? Not really. I don't know. I mean, right now I'm seeing drama between Trump and Lisa Cook. She says she won't resign. I mean, again, it's just noise. It's just noise. You know, is this enough to disrupt and maybe make the market fall like it should be falling based on a technical? You know, I mean, technically we should be falling. So I look, anything from Trump, anything from Powell, anything from Lisa Cook, anything from the Fed, anything from it's the highest valuations ever, anything, it's all noise. I mean, the reality is this market is probably going to find a way to go higher. Rotations are happening. I think that's one thing that the markets are likely going to do is it's going to move away from this 18-year stretch of Mag 7 dominating the entire markets and being such high concentration. It's going to rotate into real things. It's been a good run on Mag 7. I think there's some that I still like. I'm actually getting pretty excited about establishing some more positions on Tesla. So I think this is more of the trade of like, look, Tesla from the Mag 7 side has been one of the underperformers. So I like Tesla a lot going back up to all-time highs and possibly higher. But to start this position, I don't know if I'm just going to jump in and buy now, or if I buy with a collar trade, which means if price goes up, I get it called away. If price goes down, I have downside protection. I still think the markets, if we have like a 3-5% pullback, maybe deeper, There's clearly a lot more volatility. However, using options, I mean, it does make it pretty effective to manage the downside. I think starting out with like 111s wouldn't be a terrible idea. I could probably do some puts down here like the 250 to 220 handle. Um, and just have that be income. If I have assignment, I have assignment, but I could also, buy the shares, have some downside protection just in case, and then let this thing hopefully go. So Tesla, one of my probably favorite setups in the Mag 7 at the moment. Everyone's been riding Nvidia and thinking it's the greatest thing ever. It's fine. Nvidia's fine. Um, but I think when you start seeing, humanoid robots popping up into factories and a company that is just completely like honed in on full profit margins and I don't know, integrating this everything like chips, AI, energy efficiencies, profit margins. I feel like Tesla's that company. If you treat it like an automaker, it's Tesla's mediocre. If you treat it like the company that has the potential to be that's more than just an automaker, then I think all-time highs are achievable. And I wouldn't put it past this company to have a nice continued bull run and to see Tesla be, $1,000 at some point in the next 3 to 5 years. So could be pretty exciting. But I'd rather position for something like this than looking at a stock that was $1,000 that split and it's up 112% for the year. That's showing me overbought conditions with divergence. Same thing on the S&P, same thing on the NASDAQ. Like it just hopefully has a correction that all of a sudden makes some sense in the technical world. If you've been following charts at all and you just look at simple overbought conditions, look at when price momentum disagree, usually things pause. Usually things pull back. Usually this is a sign of at least, okay, a little correction. We've got some fibs from this low to high. Easy pullbacks. It doesn't have to be a crash. It doesn't have to be anything bad. Just a pullback. You know, offer the buyers something better than buying freaking all-time highs. That would be nice. Okay. All right. We've got 7 minutes. Let me float this out here. So here's pre-market, pretty big level around 64.40, but it looks like we're going to open there. I think what I'm going to look for is if we come back to this positive negative gamma level around 64.50, I'm going to try to look again around 20 to 25 points higher. I'm probably going to look to sell between like 70, 75, and 80 today on the call side. Put side is I want to go further out on the put side. I'd probably try to put my puts out as low as I measured based on the VIX. So if I'm selling puts, 63.80, 63.75, and that's based on the VIX rule of 16, that's all the way down here. I would put them in as pending orders. Like this would be, okay, give me a 5 wide, give me $1. Give me another 5 wide, give me $1. And if those get filled, the probability of us coming all the way back down to this low today is pretty slim. So what would happen if we took out the Jackson Hole move? That's a 0.4% move. That's a 0.8% move. We fill the gap. That's a 1% move. Okay, we're getting closer to those levels, right? But if we just close a little bit lower, pull back into all of our kind of guardrail levels, if price wants to stay in here, okay, fine. Could we drop to 64? Yeah, well, this has to light up. I don't see that right now. Pre-market, everything's sticky around the 64.40 to 64.50 zone. If we go to, let me go pre-market here. This is a 0 DT. I'm going to change this to a 3 to 4 DT. Let's go day and short term and see if this changes much. Yeah, I mean, it's pretty distributed. So 64.40, 6400, 6500. I mean, it obviously can go either way. With a major catalyst like NVIDIA, then we have unemployment claims and PCE. This 100-point range kind of makes sense with where the market could be. So just trying to make sure we're surviving day to day. Grabbing some bucks. All right. So 64.40s are open. I'm looking at this in real time once we hit the bell here in 5 minutes. So move this up. Potential low 63.80, potential top 65. Unfortunately, I'm not really going to be able to sell that like 6,500 unless price comes up to probably 60, 65. Then I can sell up there and maybe grab some credit. But Probably going to be some pending orders this morning. Um, it is a Tuesday. It's not my favorite day to just do a standard daily profit play. NVIDIA earnings tomorrow, so maybe the market is very calm for a Tuesday. But we had a pretty calm Monday. We didn't finish the day very solid because it was just all downhill from 66 down to 40. But still, that's only 20 points on the day, right? So what do we do today? See if we chop around. There's just a big inefficiency from Friday. Okay, so we'll see. Um, all right. Other technicals, we've got just a few minutes here. Just to schedule on the day, we'll be talking pinch point and starting my 3-day workshop. We'll be doing live trading all week. So pinch point 1:30 p.m. Today is going to be a core strategy masterclass, and we'll sprinkle in some live trades based on the current scan. And also Wednesday, Thursday, just purely focused on live trading. Um, I will probably go into my go filter and my get set filter and see if as long as I've got some stocks that have been coiling and pinching for at least a week or two, it's worth having a look at. Expiration wise, I'm probably going on a lot of these trades like a swing trade out to October. October expirations look pretty reasonable because that gives us a nice window between now and into September. If the market gets a little bit more volatile, that's good. That gives us direction, right? Up or down direction is good. I can trade pinch point either way and make money. Okay. All right. So it'll be at 1:30 today. Let's talk technicals. Markets yesterday. So we had 2/3 of the S&P in decline yesterday. You see a lot of red. I mean, very few green. Tesla was up a little bit. Other Mag 7s down. NVIDIA up 1%, kind of front running a little bit of earnings plays, plus or minus like $11 for the rest of the week on NVIDIA. So right when we come into Wednesday, market's still expecting like a $11 move somewhere on earnings. I calculated about $12.66 based on earnings history. So I'm expecting like a $12 or $13 move if we're going to stay within the norm of what NVIDIA's done for the last 20 earnings prints. We've had high sides of like 20 points. So I saw a high of like 14, so 14%. The stock is trading at 179. So I mean, about a $25 move would be like the extreme. I don't think we're going to go too much higher or lower than that, but more than likely we'll probably be somewhere between like 10, I'd say $10 to $13 is on average. So if you're looking to play that, there's no that's kind of the market's expectation for this week. 10 to 13 bucks on the outlier side, 12, 13, 14%, which we've seen back in 2022 and 2023. We had like $25 moves with that equivalent percentage. Okay, 2/3 of the S&P down yesterday. Interesting. Um, we are getting some interest, some like I guess it's rotation. You look at the SPY just off all-time highs. You look at the Qs, a little bit further off all-time highs. If the Qs roll over a little bit, this, for example, that structure breaks down, a little organized correction would be better to see if you're a bull. If you have an organized correction, organized pullback, as opposed to this, what everyone's worried about is it crashes and then it's super volatile. I mean, and we don't know if that's going to happen, right? That type of liberation day type move, it's like catches the market off guard and everyone's freaking out and VIX rips up to 25 or 30 out of nowhere. I don't know. I don't think it's going to happen like that. But if it rolls over, I mean, if we start breaking some recent lows on the Qs, I mean, there is room to fall. We have a 50-day, we have previous all-time highs, we've got some fib levels, we've got all these moving averages. I think at least having a correction, that's 4.6%. We could have a probably 7 to 10% on the Qs. So anyway, Dow's been performing a little bit better just off these recent all-time highs. Russell has been performing better. Market's loving the idea that the Russell's getting these rate cuts and that small caps are going to gain and catch up more. It's opening bell. We've got pretty much right where we closed yesterday. Futures are mostly flat now, down 0.1. Okay, a little gap lower. All right, let me see what I can get here. I'm going to go down to like 63, 80, and 75 and see if those puts are going to offer anything. So 80 and 75. So 80 and 75. I get 50 cents. I'm going to try to get filled on this for, let me go 80, 80 by 70. Give me at least $2. And 75 by 65. Give me at least $2. So I'm going to put in some pending bull put spreads. 63.80 is the sell put. 63.70 is the buy put. It's only trading for 30 cents. I'm asking for 2. So I'm not getting it right now. On the call side, right now, 55. We're trading at 35 right now. So 55 is about the best I can do for the expected move. I want to sell higher than that. I'm going to try to sell to 65. So 64, 6. I'll put these all in daily profit alerts here in a moment. So 65 is a 9 delta. 65 by 75. Give me maybe $2. And 70 by 80. Give me $2. Okay. So I'm going to get it surrounded for right now. If I can get rid of this dead zone, let me see what like a at the money kind of this inverse iron condor looks like. If I go 40 by 45. So we have some dead space in here, which so 30, yeah, let me see what this looks like. So 30, 25 by 30. I don't want to see it get sticky here at 40. I'm hoping that will bounce off that. So hopefully my top side would be like 40 to, let's go 40 by 35. I mean, that's looking pretty good. Let me go 590 on this. If I can get 580, I'm going to take this trade. 585. 580. That's only 15 wide, so that's not a big dead zone. Survey says, oh my gosh. This trade is so difficult sometimes to get filled. 580 not filling. Let me cancel this. That was a 25 by 40. Okay, so I'll go 25, 45. All right, I'm going to try to get this thing for 620 and then work it down. 620, 615. 610. Hopefully we can pull in at least $6 on this trade. All right, just got filled to 610. All right, got some action here. Okay, daily profit play alerts, trades coming your way. I've got one trade open and then some pending. So I'll type all these out in the Telegram for you. Okay. New trade on SPX today. That is today's expiration is the 26th. Make sure you follow these closely. Okay, because it's a reverse iron condor. So I'm doing in the money spreads on these because I'm looking to get like a 20-point dead zone, and then I want to make money in the outside of that. Okay. And then the 64.30, so it'd be a 64.25 call, 64.30 call, collected 610 on that trade. Okay, $1.10 max profit. If price is less than 6,425 or greater than 6,445, and then 390 max risk. Okay, and then pending orders. 64.70. All right. Got to post some trades. That's all. 6465, 6475. And then on the put side, it's a 70. We're going 80 by 70. Sixty-three, 65. Okay. So trades in for the reverse iron condor and then bear call spreads 1, 2, 3, 4 are pending. So those are all posted in Telegram alerts. We'll see where price goes. Real time tracking for right now. It gets a little sticky around this 40 handle. If we go low enough to work towards this 50 period moving average, that's around 64. It's actually a 5 period ATR at the 50% measurement. It's not really lighting up. Like, this isn't a large gamma level, but 64.10 is the 50% ATR target. We might just hang out in here. This market might still come back to this 50 handle. There's two levels I'm watching today. Between the 50% ATR to the upside or downside, I would imagine price is going to have what it takes to find it, one way or the other. So keep an eye on that for this morning. Okay. The pending orders, not even close to getting filled. 20 cents, 18 cents, 49 cents, 32 cents. The call sides are somewhat closer. I mean, would I settle for $1? I'd settle for $1 if I'm going 5 wide. So I at least want $2, which means I want to see price get up to, I guess one of those call side levels. If we get up to like 55, we get up to 55, we get up to 60. We'll keep an eye on the VIX this morning to see, at the 10 o'clock switch, are we going, higher or lower on the VIX? If VIX is pointed down, then that means we're probably going to see SPX go up. If VIX is pointed higher, we're probably seeing SPX go down. Okay, so we'll check that out through the morning. This to the downside is probably understandable. Like, we don't really have any support until this inefficiency around 64.10. 6400 is a gamma level, but that would be, quite the sell-off. So we'll see. Otherwise, it's, maybe testing that intermediate support around 6440, coming back to find that pivot zone around 6450, and then we'll figure out if we can get a good fill today. Okay, nice, Randy. That was a good fill at 620. Yeah, I had 9.6 as well, Zach. 9.6 is, so the market maker stuff is over here. So your implied volatility, 9.6. It was a $20 move on the day. Now it's down to 17. Tasty has something that I like to use also, IV rank. I follow this pretty closely. When I see, the VIX, if the VIX is, let's say, greater than 20, and this thing jumps up into like 15 or 20, I tend to start looking at selling some premium. If the VIX is, let's say, 30 plus, I am usually selling a lot of premium. That's one of those environments where, naturally the VIX has its moments where it can go from 30 to 50, 30 to 40, 30 to 60. We've seen those outlier type moves these last, 3-4 years. But as you have seen, that like VIX to 60 is usually like a one-off move and it's a bottom, So I think that the bigger concern for the VIX would be we start going from like 15 to 20, 25 to 30, 20 to 30, 20 to 30. That type of move would be more of the sustained bear market like we saw back in 2022. Okay, a bear market usually doesn't go VIX 40, VIX 50, VIX like that's like a flash move. Like that VIX at 60 is like a one-off move, and usually the market buys the crap out of it. Okay, so the scary VIX would be like a 20 to 40, and prices can't make higher highs. Okay, nice, David. 625 is good. Yep. So that trade here, I'll build that trade out. Option strat. Let's build out that trade. That is an iron. No, is it reverse iron condor? I'll just build out the condor and flip it. Okay, so SPX for today. So we flip this, right? So today is the 26th. I sold was it the 25 by 30? 25 by 30 on the call side. So I sold the 25, 64.25 is my sell, 64.30, and then the 45 and 40. So 45 and 40 there. Okay. So that's my trade. What this means is I have a 20-point dead zone. And I don't want price to stay in between those levels. Okay. So basically I need price to be less than 64.25 or greater than 64.45. Okay. So if we can get above this or get below this, this is a $1.10 profit. And this is a $1.10 profit. If I'm dead wrong and price stays within this 20-point dead zone, at the end of the day, this is a 390 dead zone. So that's the most I can lose on this trade. Okay. Now, what's nice is usually when this trade runs, it's not one that pays me very quickly. This trade typically is paying by, noon, between like noon and 1 p.m. If price is, let's say at 64.10, 6400 by noon, then we're going to see probably of this $1.10, we can probably collect 50, 60, $70 of that $1.10. And that's usually how I manage these trades. But this has to be like the end of the day. So if we go to what is it, 9:43? Let's go to 11 o'clock today. So 11 o'clock a.m. Right? You can see like even if we're in the middle of the dead zone, I'm barely losing. Like I'm only down maybe $10. Okay, we go to like noon today. Let's go to noon. So if we're a reasonable amount, like let's say we're at 64.15, I can't see my numbers here, but this should offer me about $50. If we're like 64.20, 64.15 by noon today, this will offer us probably $50 out of the 110. So that's probably a safe spot to be protecting profit. Okay. Same thing here, offering about $40, $50 profit. If by noon we're, up to 64.60, 65. So directionally, we need about 10 to 15 points above our 64.55 or below our 64.25, and we can collect probably 40, 50% of our max credit today. We go to 1 o'clock. Same thing, right? Now we start to see that the profit side is paying in the body, the dead zone is still not a lot of risk. So if we're trading right in the dead zone, we're still only realizing like maybe $30, $40 risk, $50 risk out of the max 390. Okay. So if by 1 o'clock today, this thing's still in the dead zone, I can make a decision. I can either say, all right, I'm going to close out this thing for a small loss at $50, right? And then maybe I have other trades that I can sprinkle in for a higher probability winner, i.e. my bear call spread, my bull put spread, right? My bear call spread, remember what I did this morning is price is here. So price is here in the middle. I'm looking to sell high with bear call spreads. Okay. I'm looking to sell low with bull put spreads. So these are my puts down here. These are my calls up here. If price is in this dead zone and hasn't gone anywhere, well, obviously I want to get out of this dead zone, right? But if price is making a move and I can maybe get filled on one of these for $2, well, if I close this out for a $50 loss and I can still make $2 on this trade, I'll manage that risk. I can take the small loss here. I can take the hopefully higher probability win here and net this thing out where maybe I can grab $100, lose 50, make some money on the day. Okay, but I'm just going to start out with this. It's Tuesday. See if we get some direction. Maybe we're on the brink of breaking that 64.40. There's room to eat back into that that Jackson Hole candle from Friday, and we'll see how this plays out. Okay, but that's by 1 p.m. today. So usually when I take those reverse iron condors like this, I'm aware of the dead zone, but we have time to manage. If I go to 2 o'clock, now you're going to start to see the middle of this starting to sag. Okay, so by 2 o'clock, there's where the risk is like, okay, well now, if we're still in that dead zone, now I'm taking on a bit more risk. Granted, if we're above 64.45 or below 64.25, my profit zone also starts to look better. So if we're in the dead zone by 2 o'clock this afternoon, that's not a good spot to be because all this is going to do is sag faster the later we go in the day. So by 2:30, if you're in the dead zone, now you're taking on more risk. By 3 p.m. and that final, look at how much that sags. That dead zone starts to get really aggressive after 3 p.m. So this is usually not a trade that I'd like to hold all the way to close. If we're in the dead zone by 2 p.m., 3 p.m. today, I'm most likely bailing on the trade. That makes sense? So the point of this trade is I want to see if price moves today. That's it. Directionally, can we go up 15 or 20 points? If we can, we should have some profit. If we can't, then by probably 1 p.m. or 2 p.m. Eastern time, I need to dump this trade. Okay. Edward, where do you think you get those alerts? You get them as a member of Daily Profit Play. Okay. Not the free session, Daily Profit Play. It's a service. It's an alert service. All my members in Daily Profit Play are with me every single day. They have a Daily Profit Play alerts Telegram. So are you Daily Profit Play? This is what I typed in for members today, right? That's the trade that I'm in. These are the trades that I'm pending. That's where they go. Telegram. Okay. Susan says got it at 620. Good. So we got some fill. I mean, I got 610. I'm disappointed. You guys all got a better fill than me. 610. Okay. So let me go here. SPX. And we'll do DPP. Reverse iron condor. Pulled in six. This one for 610. I'm up about 20 bucks. So 610, I'm going to try to take some profit around like 540. Probably 540-ish. Lower would be great, but that just depends on the market. Okay, and then my pending orders, I mean, they're still not even close. The put side is 25 and 20 cents. The call side is 50 and 28 cents. Not even close to getting filled. Is today like a good standard daily profit? Maybe it is. But if price is falling towards a 50 ATR, that means we have some direction to head lower. I don't see a big gamma level at 64.20, but if we're going to break and find it, that 50% target is around 64.10. So that might offer up some profit on the put side. Okay, if we hit the 100% ATR, that's 63.80. That's where I'm starting to sell my puts. So I'm looking at a $2 fill on that 10 wide and a $2 fill on that 10 wide. If price falls a little bit more aggressively, maybe another 20 points or so, these might start showing some better premiums. Okay. Nathan, can you put the trade on together and close it together? So you see me, I've got them organized here as one trade. So I just put them together as one trade. If I want to close this thing, okay, I highlight my trade and I can close the entire position. So I pulled the trade in for 610 as long as I can close it for, let's say, 540. Set the take profit. And that's it. I don't have to do anything. If you can't close it out, I mean, you can. Who's your broker? Like Bill's saying there, if you have Thinkorswim, you close the opposite order. You can create like the opposite order to close it, or you can just click on individual links or the individual legs of the trade, and then close them together. Okay. This is why I say a lot of times, one of the most important prerequisites you can have if you're coming to my live trading sessions is to be comfortable navigating your broker platform. When you place a trade, you can find that trade in your platform. You can highlight that trade. You can organize that as a debit or credit. You can issue a closing order and take profit order. That's really important stuff. If you're not there yet, then find some videos inside your broker platform to navigate when you put on trades and how to manage trades. Okay, Pete says sold to 75.65 calls for 70 cents, bought back for 35. Okay, just a quick bear call spread. Good. Yep. Yeah, I mean, brokers will help you. They will help you. So either like Thinkorswim, there's tons of YouTube videos. There's stuff inside their platform. Tasty Trade has demos every day. There's tons of stuff on tastytrade.com. Interactive Brokers, it definitely is one of those like learning curve platforms. I had Interactive Brokers for several years with the fund I was with, and it's not my favorite. I mean, it felt like you're basically trading from a Bloomberg terminal. But when you learn how to do it, it's like it's a robust platform. It just kind of looks old school, but you can do everything you want to do. But there's certain learning curves. I would say the first time you use like the desktop Thinkorswim, or the first time you use Interactive Brokers. Those two brokers, in my opinion, after using 6, 7, 8 different brokers and seeing they're all pretty similar, Thinkorswim desktop and Interactive Brokers probably need a couple tutorial videos. But they have them. It's like they're in their education platform. Their team can guide you, at least having some type of how to's, because I think that's important stuff. Okay, Nate says yes. Usually easy this first time it's happened. Okay. Are you in what is it, Nate? Are you in Thinkorswim? Thinkorswim. Okay. Um, yeah, you might just have to highlight each leg individually then. Maybe each leg individually. So, all right, I'm starting to notice here we've got the 6440 that's filling up. We've already kind of checked it off the box as far as the gamma level hit today. We do have our 6450, which is the positive negative gamma flip zone. If we're going to see prices falling, 50% ATR is around 6410. 100% ATR is around 6380. Okay, now I'm going to zoom out a little bit. I think that price could fall and try to eat into this candle a little bit from Friday. If it does that, I wouldn't be surprised to see price drop to like 64.10 or 64.11 today. A little bit lower than that. Honestly, in a negative gamma environment, don't be surprised if we do make a run down to this 50% ATR, which is around 64.10. We start to see some support. Okay. I don't think the market's just going to erode all in one day. I mean, it certainly can, but I doubt it. I think the market's still going to be relatively tight. Bears make a push, bulls buy it right back, and then we'll have to have some bigger breakout. And again, this week, like Nvidia earnings, unemployment claims, core PCE, does that move the market at all to wrap up the month of August? Do we try to finish at the highs again? Do we give some back? I don't know. We'll see. But all I'm really looking for is if price goes, anywhere, right? We hit this 50% ATR, we hit this 50% ATR. For my double up service, I mean, if this starts to get larger or this starts to get larger, then I'm looking for a trade to those levels. But if it just stays choppy and nothing happens here and just sticks around 64.40, that's not really going to give me any trade. All right. So far, we have pretty choppy morning. Is anybody doing just a standard daily profit play? My usual daily profit play peeps. We doing anything standard? And if so, how's it going? Because so far we have about 25 minutes of centered price. So should be pretty good on that, standard daily profit play. Yep. Greg says yes. Randy says, or Dr. Barnes says yes. Tried, couldn't get filled. What were some of the deltas that you guys used? What were some of the strikes? Call side strike, I'm imagining it's going to be like maybe the 60, 64, 60, then maybe the 10 with that plus minus 20. I mean, you're probably going like 25, 30 wide. Yep. Okay, Greg's at 65 and 10, 10 wide, 64, 60 and 400. Okay. What were those credits, by the way? Nice, Vladimir. Larry says 64, 60, 65, 05, 10 wide, even right now. Okay. $1.30, $1.50. 10 Delta, $1.50. Wow, Tom. That's pretty good. Larry filled for $1.70. Okay. So 10 wide, $1.30, 10 wide, $1.50. Larry, you 10 wide for $1.70? Okay. Got it. All right. We'll see what happens. 15 wide, 175, Brett. Okay, good. All right. So while we are hanging out here, I've got my chart up on this other screen. So keep an eye on this to see if we have any directional movement. If we get up to this positive negative gamma pivot point, that's around 64.50. If we're going to any directional level, 50% ATR, 50% ATR, that's up to 64.70 or down to 64.10. Right now, just price is staying pretty sideways. Okay, I want to give the day a chance to move, and I also want to I'm just going to be patient on the highs and lows. I mean, if I can get price making any type of move up into these call levels, then I'm looking to sell some premium up here. Price can fall in, eat into this Jackson Hole inefficiency candle. Then we fall towards like the 64.10, 6400, and maybe we can get filled at these levels here. So if I can get, I mean, I put the pending orders in at $2, but if I can get a dollar, dollar 50, that'd be acceptable. It's just a bit more risk. Okay. Let's see what we can get. All right. 9% for Larry. Got it. It's hanging in at neutral. Okay, good. Filled at 210, Greg. Oh, 20 wide, 210, not bad. Good. Okay. I want to. So yesterday I closed some positions out for my Project Options Edge. I'm going to do the same thing on some of these other margin accounts. So let me go into Apple. I had some ratio spreads on Apple that I'd like to close. So the 170 by 165, this one should be closed. Apple is closed. This account, Apple ratio spread, this was up 66%. That was 218 down to 70. Let me go get out of here 70. Is Apple down on the day? Apple is down a little bit today. 170 by, I mean, it's so far out of the money. I wanted to manage some of these to get some of the buying power. So I've got another like $70 worth of profit on this trade, but I also want to get rid of some of the naked put exposure and get some buying power back. So let me see. 17 and 73. Let's try to get like 71. All right, I shouldn't have to get more than a 75-cent debit here. So these are Project Options Edge trades that we've taken. This has been open for a while. That was 74 cents. Okay. This account here for Apple. Close this one also for 74 cents. No Apple. No Apple. Good fill there. Okay. A couple more. No exposure. No Apple. No Apple. This one, yes. Closed out. Okay, I'm just walking through some of the trades I did yesterday, and I'm just cleaning them up in my other accounts. So no exposure there, and no, okay. So that takes care of Apple. Next up was Robinhood. Robinhood, right here, ratio spread, a dollar. I'm up 82%, so I'm looking to close this one down. That was for 20 cents yesterday. Hopefully, it's less than that today. Perfect. See if I can get out of here for 18 cents. Hopefully, less than 20, or I mean, 20 is fine, but 19, 20. Filled at 21. All right, so I'm closing this one at 21 cents. No Robinhood on this one. Nope. Okay, I'm still watching the other trades, just doing some trade management here. Okay, filled there. Robinhood. Okay, filled at 20 cents. Okay, it's going to put a big fat star next to all the ones that are closing out for profit. Okay, so Robinhood's taken care of. Next up is Palantir. Palantir. This was 253 down to 40 cents. So he was trading for today. It's 506 max profit. It's up to 430, so 85% of that max credit. I'm going to take this one off the table. So ratio spread. Hopefully this is trading for less than 40 cents. 38 cents. Let's see. 39 cents. I've got filled at 40 yesterday before the close. 39 cents there. Good. 39 cents. Okay, this turned out to be a pretty nice position for everybody. Palantir. Pulling in 1 cent better, which is nice. Okay, Catherine, I see your comment there. Got to sign Snap from Newsbreakers. You keeping it or closing out? I'm keeping the shares of Snap for right now. Let me see if I got assigned as well. What was we did a 9x8 for 75 cents. You get assigned on that? Let me see if I got the shares as well. So I'll look at Snap. Is that what we did? Was it an 8x7 or 9x8? I guess I'll look at Newsbreaker spreadsheet. So Newsbreakers tracker, that was Snap. We did 9x8 for 76 cents. That was an 829, so that expires this week. Okay, yeah, that could be a sign. We're at 712. Let me check and see if I get a sign on that. Okay, yep, I'll put that on the list. That one closed out for Palantir. We close these out for some profit. 38 cents. I don't think these newer accounts took it. Did not take it. Okay. So that's Palantir. Next up, we had Dell, 140 down to 25 cents. So 140 trading for about 25 cents. See when we get filled here at 25. Fudge muffin. It's a 98% chance of profit. Let's see if I can get filled here at 25 cents. That was a good fill yesterday. Oh, well, it's misleading. It said the mid price at 30, but I got filled at 25. Okay, let's get this one closed out. I might as well try less, right? 22, 23, 23 cents, even better. Okay, good. Dell, not here. Not here. This account, no Dell. No Dell. $0.23. Bill 23. Good. I'm happy with that fill, actually. Okay, and then 23. For what class, Gerald? I don't. You can. Let me see. Send me an email. I can probably make a copy and send it to you. What? Just let me know what class. Send me an email, Gerald. chrispulverpub@gmail.com. Okay, that handles all of my Dells. PayPal had some naked puts. This one was not a huge profit, but it was just under 50%. Still wanted to get rid of some of the naked put exposure and get the buying power back. PayPal should be in here. PayPal naked put combos up $260 out of a max 505. So I'm up over 50% now. All right. Let's see when we close this one down for. So 243, let's go 240. Let's try 240. Be generous, PayPal. I'll try the mid at 243. Go a little bit higher at 245. Perfect. All right, that's over 50% on that one. I'll take that. PayPal naked puts closing out for 245. Nice chunk of profit there. PayPal, no exposure. PayPal, nothing. This trade's been running for a minute. This one should have it. PayPal, this trade's been open for 100 days. So 245. Very nice. Okay. PayPal is done. MO. I'm still watching. Price hasn't done anything. Standard Iron Condors, I gotta say, we've got some profits closing, right? DPP Iron Condor 130 out at 90. Yep, Greg, you're out. Good. Yeah, it's been a good, 40 minutes of trading. Price hasn't really done much. So we're right around the same center price as the open. We're just really sticky around that 64.40 handle today. Okay, MO. Get rid of some of these. This is a good put combo. This was a good trade. Up 840 and it's trading for 700 bucks. I think I got out yesterday for $1.41. That was over 709. This one's going to be down a little bit. We're at 66. Probability of profit in this one is like 98%, but I'm just going to take the profit. I guess I could let the other ones linger longer. If I take 330 off, I mean, this one's 97%, 98%, 99% chance of profit on MO. So of a max profit of 330, I get 270 out of that. And then I can let the other ones expire. What'd be my full profit? Let the other ones go to expiration. So 237, 158, 115. So 509 plus 270. It's like I get 780 out of a max 840. Maybe I'll just do that. I want to get some of the buying power back though. That's why I was closing out the trades and making 700 bucks out of 840 is not too bad. I'm going to take the profit. So I'll take a slightly higher debit, which is annoying. I got out for $1.40 yesterday. See if I get out for $1.50 today. $1.50, mid price at a 52. Shouldn't have to go higher than 55. All right, 54 got filled. 154. Come on, man. This is what I was looking for some pretty serious buying power. I was around 2 million yesterday, and now I'm up to 2.1, 2.128. So about 100 and some $1,000 of buying power coming back my way, which is what I wanted. That gets rid of some of my delta exposure too. 56. Come on, dude. Give me a fill. 7. 57 got filled. MO. Okay, that one was keep rolling. Yeah, I'll roll that one later in the year. This one, no puts. No puts. I'll roll that one. Okay, so just taking care of some management. Still going, still going. All right, that's MO. We got one more to do here, Airbnb, and then just doing some spot checking. And then I want to get some pinch point in for our masterclass workshop today at 1:30. Airbnb should be a ratio spread here. 175 was max profits, trading for 154, up 88% of that max credit. Capital efficiency wise, I'm just going to get rid of this one, raise some more capital, take some profit. Yesterday, this closed at 20 cents. Today's at 30. Come on, man. Let's try 20 cents again. 25 cents. Got filled at 25. That's not bad. It's under the mid price. So pulling in 150 bucks out of a max 175. Okay, so if anybody is in my project options edge, this has all been management for those trades. Okay, there's still others running. There's still some that I'm going to let run. We've got a lot of trades that are sitting at like 90+% profit, 95% profit, 98% profit. I want to let some of those come to full expiration. The one trade I'm watching closely for September is Progressive. That trade has a potential $1,000 profit trap. And even if we have a bit of a dip, I think that one could be okay. So I'll talk about that one in just a moment. And then I want to answer Catherine's snap. So Airbnb, not in this account, not in this account, not in this account, not in this account, not in this. Okay. So that should handle all of those. So winners on Apple, Robinhood, Palantir, Dell, PayPal, MO, Airbnb. Progressive, which is PGR. We put this in for Project Options Edge as well. This one, there's a September expiration. So this is September 19th, 220 by 210. We're trading at 243. The option chain for a 210 is around a 5 delta. There's still about a 95% chance this trade is a winner. Now, the reason I'm not closing this trade out right now is because of the 110, it's up about 67%. Now, I could take the profit, but if for some reason Progressive decides to drop maybe $10, maybe $15, this trade, you can see it. Okay. So this trade has a potential $1,000 profit trap. So we're trading at 243. This is my 210 pin price. So if price decides to fall as we come into September 19th, there is a 1, 2, 3, 4, 5, 6, 7, 8, 9, $1,000. So from 220 down to 210, for every point, there's a $100 gain. So this potentially has a $1,000 profit trap on top of the little, dollar something that I pulled in on the trade. So I'm not saying that I want price to go down, but I'm saying if it does go down, I am sitting here positioned for a 95% chance profit with a potential $1,000 bonus. So I'm going to let this one run and see if this 110 can actually offer us up some bonus credit. Maybe it does, maybe it doesn't. If it doesn't, that's fine. I'll still take the $1.10. If the one for January for 210, same thing here. This is also a lower strike at 190. Probability profit on this one for January is quite high. This would be about a 92% chance of profit right now. So overall, looking pretty good. Janelle, gamma level at 6,500, dynamic trends, 15. I mean, let me see. I don't see it. Are you? You might be on the. Let me check the study here. You might be on the 3 to 4 day. If I go, let's go short term. I've got a big gamma at 6450 and 6500. Okay, that is out to like Friday. So you're looking at it. You're looking at expiration there, or like the DT flows that could be out to Friday, which obviously with Nvidia, markets can go either direction. So what we're not seeing is a differentiator between calls and puts this morning. We're at 28 and 36. So price is just kind of grindy today, which is okay. A grind to this level. If we're above, I mean, remember, all I'm looking at for the day is a 50 to 50 ATR. So if we go anywhere, it's like, do we come down to the 50? Do we go up to the 50? I mean, I could see directionally, it's like for a Tuesday, please don't tell me this market's going to do this all day, right? Rich, it doesn't. Project Options Edge is it's a Telegram channel for those members, and I have it tracked in my personal spreadsheet, so it's just a Telegram update. But I post videos for the Telegram channel as well. So I did like a 25-minute video last week and send it out to all Project Options Edge members. That's usually how I follow up. Is we either do a live session or we have a video follow up on like open positions. Okay. All right. So Janelle, for your dynamic trend, I see the same levels you do. I'm just telling you that your levels are reading from like a 3 to 4 DTE. So that's going out to Friday this week. And I can see it. Like we can certainly light up all of them. Okay. I'm looking at the 0 day, which is just today. Okay. Just the 0 DTE. And my levels aren't quite stretching up to 65. So my 50% ATR is 64.70. I could see price getting, to 50 today, maybe into this to 55 zone today. If we stretch up into 70, that's actually good for my reverse iron condor. That's great for my reverse iron condor, actually. Right. And that also might allow me to get filled at the sell puts or the sell calls that I put in earlier today, too. I want to monitor those levels. Okay. All right. So on a positive side here, I just threw in about another $130,000 in buying power. That was the point. Progressive, I want to keep an eye on that one. And let's go to Snap for Catherine. And I want to switch over and let's hammer through some pinch point. So Snap, did I get assigned? I did. So I got assigned as well, the $8 put. We're trading at 708, $8 put. Somehow well, I guess I paid 96 cents for it and it's pretty much worth 92. Well, that's annoying. I don't really have to put in another put. I think I just need to sell calls. So Snapchat, let me do the math on that. So I did a 9 by 8, 9 by 8 bull put spread for 76 cents. Okay. So the broker assigned at 9. Okay. And then I have a long put at 8, which should be worth about 92 cents. So my break even would be 9 less the 76, and then less the hopefully 92 cents that I can get for my put. Let's do the math. So 9 minus 76 minus another 92. So my break even should be like 730 on that tranche of shares. I do have another 100 shares that are a little bit higher. Okay, let me check my break even on. So because I'm getting 200 shares, Snap. Break even. I've got a break even at 802. I've got a break even at 794, break even at 802. Okay, so I've got a break even at 802, taking another chunk at a break even at 732, so plus 8.02. So 732 plus 802. So 767 is my break even. Let me see if I can close out this put. I mean, how much lower do we go on Snap? We're down to 708. We're back below these 2023 levels. We're back below I mean, could we come back down to like $5 or $6? I mean, maybe. I hate to say I need to buy a put to take this thing down to $5, but it might be in my best interest to do that. Now let's just talk about some covers. So let me go for this one, because this expires on Friday. Let me get rid of this trade. I think it's best to take the profit here. So 92 cents. Okay, so now I can do the math. Like I said, it would be 9 minus 76 minus 92. I've got a break even on those 100 shares at 732. But I already own shares. Now, if you just did this trade, so Catherine and anybody else that did this trade with me, 732 is my break even. We're trading at 708. If I could go in to, let's say, September, okay, and I could sell, gosh, this is the only frustrating thing about this stock is like the premiums aren't that awesome, right? So September, I'm not even getting enough to get a break-even trade like I want. I could sell the 750 and get 17 cents. That kind of makes it a break-even, right? Because I'd get 18 cents. I'd take 732 minus 17, and I get it called away at 750. To just straight up repair this trade, I get 35 cents profit. That's better than making it a loss. Okay. So what I'm going to do, because I own it around $8 and change, this would be 732 plus 802. So I own it at 767. I need to do like a 750 or an $8 covered call, but I'm not excited about getting single digit credit. So I'm going to go out a little bit farther. Let's go out to maybe October. You know what? I mean, I might as well make it worth my while. Let's go out to like November, December and see if we get some spirits here. If I get it covered, let's say I can do the 9 or the 6. Okay. Or I can do 8 and 7. 18 cents credit. That's not enough to cover me. Maybe an 8 by 6. So I can get 23 cents credit on a collar trade. The 6, I mean, this gets a little cute with the trade, but at least if it goes down to $5, I can get another, maybe $1.45 and lower my cost basis. I don't want this to be dead capital. I mean, I'm kind of annoyed that I'm already dumping. I mean, it's like $2,000. It's not a big deal, but if I do an 8 by 6, I could just do the 8, and that brings me down. So 767. And then I sell an $8 call for 65 cents. That puts me down to $7.02. I get a called away for 98 cents. I'd make, $200 on the trade, but price has to go up to 8. If I wanted to protect the downside, I sell the 8 and I buy the 6 and I still get 23 cents for it. I still get it called away. So this would be minus 60, I guess 23 cents. I get it called away. I make about $100 on the trade. Now, the upside on Snapchat is, the upside is pretty impressive. It's just, am I going to hold on to it long enough? Am I going to hold on to this thing back to $10, $11, $12? Point is, if I'm trying to manage the risk to the downside, I think a gap fill would be great. My concern is that, why are we taking out these lows? If I look at, let's go simply Wall Street. I just want to see what this thing is forecasted to be. I just don't think they've monetized their user base very well. So I don't love this at all. Currently unprofitable, not forecasted to be profitable. Insider selling, trading way below estimated value. That's fine, but why isn't it profitable? 2 times price to sales, fair value 18, trading at $7. Well, there's clearly some upside potential, but I don't really feel like sitting around waiting for it, hoping that it goes up. If I can manage my trade, lower my cost basis, that's probably the best thing for me to do. Next earnings print we have is going to be in October. I guess I could try to do something prior to the earnings in October. And that way, if we get a run to the upside, then, at least I can let the upside run without me covering it and getting it called away. That makes sense? So if I cover it, through earnings and price all of a sudden rips up to like $10 or $11, I'm just sacrificing all that upside. Earnings from what I'm showing here is October 28th. So let's look at the October expiration. And I have an October 17th. So if I sell the 8, buy the 6, I still get 10 cents credit. It could still get called away at $8 prior to earnings. Let's see. I don't know. I think the smart thing is just, does it rally on its own, get it called away? That would be 767 minus 10. I get it called away for 43 cents on 200 shares. It's like making $100. It's a repair. It's better than losing, you know. So let me just think about that for a sec. Because I'm not excited about like flipping this thing for $100. It's better than losing. But if I'm going to like, cap my upside, I might as well get paid to do it. So if I went out through December or went out to January, which I know is it's like going to the end of the year. But if I did like the 9 or the 8, let me go 9 by. So the 9 by 6 is essentially a free hedge. But now I get it called away 767, get it called away at 9. Oops, 767, get it called away at 9. I make 133 on 200 shares. I mean, I could stomach a flip of $266 if we're back up to $9 by January. And to the put side, if we go down to, $5 or we hit those like all-time lows, at least I'm riding this thing out a little bit longer. So I think I'm going to do this trade here. That's going to cost me money. This is not going to cost me money. I'm going to try to get this one filled for a 1 cent credit. Okay, 1 cent credit, and see if this will fill for a collar trade. Can I pay a 1 cent debit? All right, so I got filled for 1 cent, which means my 767 is now adding a cent. So my break even 768 gets called away at 9, make $1.32. If it gets called away at 9 on 200 shares, I make 264. Okay, but now I have some downside protection. If price goes, I'm going to add this in to my tracker here. Sign on 9 by 8. We'll put spread. 76 cents credit. Close the 8 put for 92 cents credit. So I have 802 break even and 732 break even for a 767 net break even. Added a collar trade, which is 116 expiration. Sell the 9 call, buy the 6 call, buy the 6 put. That 6 put is a 47 cent debit. I want to keep track of that debit because if that debit can turn into, if this 47 cents right here can turn into $1 or $1.50, then I'm going to lower my cost basis even further. Does that make sense? So if price does fall to like $5 and I can turn this 47 cents into like 90 cents or $1 or $1 and change, I'll probably end up taking profit on that put, lowering my cost basis by another 50 to 70 cents and still letting it get called away at 9. Try to let it get called away at 9. And that would increase my profit potential. 768. And let's say I can lower the cost basis by 50 cents, get it called away at 9. I make 182 on 200 shares. I make $364. So that's the game. I mean, it's kind of annoying that this thing isn't performing better. But this gap fill would be about $8.75 to $9 anyway. So I think I'm putting the spot in the right place right now. If I wanted to let it run longer, obviously fair market value at 18 is great. Getting back to these range highs at $14, $15, $16 is great. But I wouldn't be surprised to see this thing somehow find a $6 or $5 level before we get, kind of the squeeze play to the upside, right? I mean, this is like 2018 lows. There's COVID lows. There's 2022 lows. So the fact we're just inching below that is a little frustrating. Okay. All right. That being said, I think that covers a lot today. I do want to get into some pinch point, and I want to get everyone ready for the 1:30 p.m. masterclass today. Okay. So masterclass today at 1:30 p.m. on pinch point. We will be looking at some live trades. Here's a quick glance at it. Pinch point. Click on the scanner. All right. We just got a lot of stocks popping into the go zone. This is perfect. So we got a lot of action this week, which is nice. This was 8 stocks yesterday. It was like 9 stocks last week. Now we're up to 18 stocks. So we're getting some more activity to price out today. So coming into today's workshop for pinch point, we're going to be pricing out a lot of trades. So we'll talk core strategy first, and then I want to price out all of these trades together. Cool. And then in get sets, we got some household names. NVIDIA is tomorrow. We'll talk about that one. Robinhood's up there as well. I want to see if these have been pinching for at least a couple of weeks. Chipotle, AVGO, crap. I mean, this is Norwegian Cruise Line, Citigroup, PayPal. I just took some profit on PayPal. Yeah, we've got some good looking trades. So if these are coiling, this is great. So either the 2-3 weeks in get sets, or we've got some goes. We're going to be able to price out probably 15, 20 trades this week during the pinch point masterclass. Okay. All right. Meanwhile, I'm still waiting on some of my daily profit plays to fill up the tops or bottoms. Hasn't happened yet. I just have the reverse iron condor with that 64.45. Hopefully we get up higher than that. 64.50 to 64.70 today would be my call side levels. And if we break the lows at 25, then we want to see this thing go down to like 10 or 6,400. But hopefully price is not just going to stay within like a little 20-point range. All right. And let's go ahead and finish up this. So pinch point, this is what we're doing today in day one of my 3-day workshop. This is a masterclass series. And what I like about pinch point anytime I teach this class is, we talk through the core strategies. Okay. We train the pinch point, how to find trades, and then we take a bunch of trades. Like it's actually a lot of fun, because if I'm getting more and more stocks popping up on my scanner today, I've got 18 that are actionable, probably another 5 or 10 in the get the get set. Yeah, the get set zone that are some pretty good names as well. And if we're going out 30 to 40 to 50 to 60 days, a lot of these swing trades are going to look really good. Okay. All right. So pinch point scanner as a tool, some of the examples you'll see here is using 2020 hindsight. It is a tool for traders. All by itself, the pinch point scanner is not a service. There is an alert service that goes with it. If you upgrade the pinch point scanner to lifetime access, then you get 12 months of my alerts to go with it. And that's where the masterclass is like this week's masterclass. Today's day 1, tomorrow's day 2, Thursday's day 3. It's open for anybody. So if you are a pinch point scanner member, you can join me for the masterclass. Okay. Because it's more teaching, it's more training, more education. All right. But if you want the added alerts, if you want to trade with me for the next 12 months with a pinch point scanner, how I like to use it, how I like to trade it, then you upgrade to lifetime of the scanner. You get 12 months alerts with me. If you just want to add in my alerts, you can add them into a la carte. Okay. All right. As always, trading is trading. There's going to be winners and losers. There's no black box miracle system that prints out trades automatically. This tool, this pinch point scanner, has given me a pretty awesome edge in the markets because it's spoon feeding me fantastic trades that are likely going to be moving. And we're getting a lot of these trades prior to any type of real direction. If you're not comfortable placing trades, or you're not comfortable losing trades, which inevitably will happen, then trade a demo account, right? Trade really small, trade a demo account. My saying that's been very tried and true all these years is process equals profits. So a trade is a trade. You win them, you lose them, and you try to win more than you lose. And it's not that hard. I think the markets give us a bullish bias already. We follow along in the right environment. Bull markets last a lot longer than bear markets. It's just making sure you manage risk and you're comfortable with the process of trading. Okay. So today let's talk about a predictive breakthrough that could change the way that we trade stocks forever. This certainly has been a big change for me. Predictive breakthrough that is first of its kind, thanks to a top tier team of mathematicians and experts with trading experience. plus a game-changing way to decode a stock's volatility profile. We really have kind of cracked the code on, spotting a coiled up stock that's ready to explode higher or lower. And this is typically before it happens. And that's clutch, because I'm talking about a way to front run some of the most explosive one-sided moves in the entire stock market. And I know that sounds crazy, but thanks to my pinch point scanner, okay, the best part is this tool is up and running. There's no download, no application. It's just our site. We host it. We give you an access token, and you can see the exact same scanner and tool that I have. So today in the masterclass, we'll use the same scanner. You'll see the same trades that I see, and we'll just price them out together. So you don't have to download anything. Everything is hosted on an easy to navigate website. It's very intuitive. The scanner looks great. You can search for your favorite watch list items, like you click on all stocks there, and then you want to check your filters. It just gets better and better and better. And I tend to focus on the get sets and the goes. Okay, so if you click on the go to generate your list of pinch point stocks every morning, what you're going to see there is a list of top stocks that are primed and pinched and coiled each and every day, which means that direction is coming soon. Okay, like what happened here on Next Era Energy, pinch point scanner flagged it as a go. The stock is coiled up. It's as good as it gets, right? Prices trading in a tiny little range. The pinch point scanner, it actually gives you the automated expected moves and the expected like the likely expiration and expected move ATRs, and it can give you all the call options you would want if you wanted to follow just a simple call option or put option. But you've got your price action, stop loss, and take profit. And price hits our ATR, hits our expected move, and we get a triple digit winner because options are cheap when they're coiled, right? Prices look dead. Options don't do anything. All of a sudden, the underlying changes by 3, 4, 5%. We get a huge move in options that pay us out. So we close out the trade towards the target, triple digit winner on Next Era Energy. A few days later on Walgreens, flagged again for the pinch point scanner. Again, stocks trading at like a 20-cent range. It goes up a couple of dollars. Triple digit winner. Okay, that's really all we have to do. We're looking at this pinch point scanner to spot and find great trades for us. And when price starts to move, we get a lot of near vertical parabolic moves, and we're in these trades before they happen. So while the movement's actually taking place, you're already in. That's the good thing, right? So you're not going to find these types of opportunities with good old-fashioned indicators. You're not going to find these type of high-paying trades by taking a look at fundamentals or executive reports. This isn't on unusual whales. This isn't on like following insiders. This isn't Form 4s or 13Fs or none of that stuff. It's none of that stuff, okay? These buy and sell signals that you're seeing that I just talked about, those are way too late. Those are always, after the fact. So the key to today's opportunity is actually with using non-traditional methods. This is what I think about when I think of pinch point scanner. It just gets better and better and better and better until the stock's volatility profile has to go somewhere, right? Like the stock won't just die. A stock won't just stop moving. There's always like a life cycle of these stocks. There's a rhythm and cadence to these stocks. So this is the moment that the stock is practically forced to make a big move within the coming days. That's why I call it a pinch point. It just gets better and better, more primed to move. And as you'll see today, it's the pinch point that unlocks the entirely new way to target explosive parabolic moves. Okay, this allows us to get in on the right side of what could be hopefully a double or triple digit gain before the stock actually takes off. Here's an example with Moderna. We're seeing it, seeing it in like a $1 to $2 range. It goes up $20, pretty much straight up. How the heck did that happen? Well, it's pinched, it's coiled, it's ready to go. Triple digit gain on a Moderna. WMB, same thing, trading in a tight range, 83% in just a couple of days. Black and Decker, same thing. We're trading a couple dollar range. Underlying changes dramatically, up triple digits, 178%. So if you like the idea of getting into trades before they actually happen, this is a good spot to be in. So buckle up for pinch point scanner, okay? So I'll give you the list. Like I said, I got 18 stocks today. I'll talk about it in my masterclass. You can see the stocks. I mean, seeing them is one thing. Trading them with me is another thing. But these are all stocks that are likely going to be moving in the coming probably weeks, okay? And I'll give you a list of the stocks. You can see them, no strings attached. So if that sounds good, stick around. Let's talk pinch point scanner. Okay. Also, if you'd like to join me for today's masterclass at 1:30 p.m., type in go in the chat. Let me see some goes in the chat. Okay. So welcome to Pinch Point Scanner. If you haven't traded with me before, by this point, joining me every single day with my daily profit plan, you know who I am. My name is Chris Pulver. Yes. Former hedge fund manager, experienced option strategist, proud new dad, and happy family man. So that's, I don't know, that's probably Carter at like 4 months old, maybe. Now he's chunky 8 months. We had a good laugh last night with some videos we turned into pictures. You find me trading on with daily profit plan and live sessions every single day, whether it's market updates, whether it's just my time and my services and sessions. I grind. all day, every day. Live trading with members every single morning, placing real trades right alongside you. That is one thing I'll say with all my services. It is real trading, live trading. My skin is in the game. My money's on the line, just like yours. Okay. So I do have a lot of experience in the markets. I've seen a thing. I've seen a thing or two. I trade everything. I trade indexes, stocks, options, futures, forex, cryptos. Powerhouse services that are killing it right now. Waterfall income and daily profit rate all by themselves are maintaining over 90% winners. Those trades alone, I think we have over 500 trades between waterfall income and daily profit rate, and we're still maintaining a 90+% win rate. Newsbreakers, we're still in the 80s. Pinch point, we're in the 80s. We're at like 83% winners on pinch point. The average win percentage, 85% on just these three services. Like I said, 90+% daily profit rate and waterfall income. And again, these are all live trades that I've taken with live money and lots of live sessions. So, followers that have been with me, members of my services, we're killing it during these peaks and valleys. But here's some of these top stories. Larry's up 67K since February, probably up more. Randy's closed out over 200 trades. I know that's an old slide. Over 200 trades with a 90+% win rate. Lynn went from 4K to 20K. David made over $8,000. Greg's had more success with me in the last year than in the previous 10 years or 9 years, which I love. I mean, that's just showing like something about my education is sticking. Okay. So as great as those stories are, it's just, tip of the iceberg, pales in comparison to what I'm going to show you today. So this has been one of my most important tools and one of the most important like evolutions as far as like bringing software to my franchise. And it makes trading a lot of fun. It's a predictive breakthrough that, as far as I know, I haven't seen anybody be able to replicate this. So we're talking, nearly 10,000 stocks that my scanner can look at in seconds. And this is pre-calculating which one of those stocks are primed and ready to go higher or lower before it happens. Okay, so all we're doing is we're jumping into our pinch point scanner. You can go to the go filter and just see what is actionable. All right, so I kind of work at like the best stocks first, and then I'll broaden out. So like, for example, we got 18 stocks on today's watch list. That's 18 stocks I'm going to focus on. If I want to go a little bit wider and bring in like NVIDIAs and Hoods and some other household names, that's fine. But I need to make sure those are also pinched and looking good to trade. Okay, Robinhood on January 14th. It was sitting here without about a $2 range. Pinch point algorithm gives you your stop loss based on price and expected moves and ATRs. We went up to hit that ATR and exceeded it, a triple digit win on Robinhood. Now, I'll walk you all through the stuff today in the masterclass. We'll go through step by step with the core strategies. I'll show you everything I built into the code and why I believe this is more powerful than running really any other trading system out there. Why? Because I think a lot of people do this. You chase what's hot, you chase what's in the news, you chase what you think is going to be great, and it makes you somehow like chase, and never just take a good trade. Just a good trade. How about getting a good trade before it actually hits, before it becomes mainstream news? Feeling like you're constantly taking like, number one, you're constantly chasing. It's exhausting, right? You're taking one step forward, maybe even two steps backwards. I never like to hear traders that have, made good strides and profits, then give it all back. Okay. But, trading's not easy. If it was easy, like everyone would freaking do it. If you look on social media, it makes it seem like it's just the easiest thing in the world. It's not. I mean, you can look at any, successful like Stanley Druckenmiller, Jim Simons, Warren Buffett, Bill Ackman, any of these like household, George Soros, for crying out loud. Any of these crazy legendary names you've heard of, it's like their careers, their legacy is built on like making 20 to 30% a year. So I mean, this idea of like so-and-so's made thousands of percent, it's like, okay, is it sustainable? Is it real? Is it good risk management? But just trade. Like, let me teach you how to trade. So I've logged tens of thousands of hours in the markets. I coach traders. I've been doing it for over a decade. I think the number one reason that people fail is risk management is terrible and you're chasing stocks that are already moving. Those are probably the key things that I see where people struggle. Okay. And that means that usually you're late to the move. You're chasing, you're overpaying for premiums. And this is what I'm talking about. Stock looks good, it's breaking out, it's at the highs, and it goes back, pulls back, right? Or it breaks down. You're going to see if you can sell into, a lower low, like chase that momentum, and it rips the other way. I get it. Like there's price manipulation all over the place. Stocks are already moving. It's easy to get caught up in the news and the noise and let the emotions and the chasing, take over instead of making good decisions. So what's even worse is when the stock's moving, the options market is already changing, right? And these options, these premiums get really expensive, which means you're paying the premium and you're getting way less bang for your buck. So the real opportunity, in my opinion, is with something like the pinch point scanner where the stocks actually look completely dead. Okay. This is like boring charts like this, and they've consolidated for weeks, maybe even months. So it might sound backwards, but think about this. When a stock is in a tight range, the options, it's cheap, right? Because the underlying hasn't done anything. So it's priced very fairly. And then we get an explosive move that gives us the option chain that will change in our favor, right? So we go from like a lower volatility to a higher volatility. That swell in direction is good for us to make some profit. So even a small underlying move of 2 to 3% can deliver a massive return. So when the breakout finally hits, this is where we're talking about some explosive parabolic moves. AOS back in March, maybe this is a stock you've never heard of before. It's in a tiny little $2 range, like dead, right? Nothing's happening. But on March 6th, it didn't matter because my pinch point scanner flags it as a go filter stock. That's great. We've got a $2 range. We're looking for AOS to go likely higher in the coming days. The pinch point scanner does give you the automated generated options alert with the suggested expiration, which is usually 4 to 6 weeks out. The ATR and the expected move. Make sure you're not overpaying for these options. And what do we have? Stop loss and take profit. Within a couple of days after that pinch was in the go filter, the stock moves. Everything about the options profile changes, and we have a triple digit winner on AOS. Okay. The stock only moved about 5%, and we got triple digits on that thing. Okay. Now, meanwhile, if you're trading like a Tesla or Nvidia, those are much more expensive. They're obviously much higher liquidity, and they're crazy expensive options. And it works both ways. I mean, you can collect good premiums on those trades, but as far as like buying calls on Tesla, buying calls on Nvidia, it's super expensive. So how about an AOS that only has to move like 3, 4, 5% for triple digit gains, where we'd have to have a blowout type move on the Teslas and Nvidias because they're just far more expensive. Okay. But it gets even better because AOS wasn't the only opportunity that fired off on the pinch point scanner. There was LKQ, again, very tight range. Pinch point scanner gives you the price action, stop loss, and take profit, goes to the expected range and then some, triple digit winners a couple days later. So $2,000 into that would have been LKQ turned into 5620. Beef up the savings account, enjoy vacation. So are there bigger winners? Yep. Do we have some losers? Yep. We'll have some losers. We'll have small losers. We'll have small winners, but we're winning 83% of our trades right now. And my favorite part is a lot of these trades have been automatically closed out for profit. Okay. So I'm sure you're wondering what exactly triggers the scanner to give you a go signal. Okay. And this is, how are we finding these trades before traders are actually getting in and seeing these trades move? And again, valid question, but it comes down to a simple pattern at the heart of how the stock moves. This is a market cycle pattern. Okay. This is an age-old theory explaining how and why stocks move as they do. Now, a lot of people think about this on a larger time frame. 4 stages that the markets are in. We have the accumulation phase when smart money is essentially loading up on shares. They're accumulating buys. Okay, this is when you want to buy. Why? Because more than likely what's happening is you're going to get a breakup phase when all of the upside gain is realized and seen. After that, once that upside gain is seen, there's a distribution phase when smart money is selling shares, reallocating, adjusting percentages. And what happens? Now everyone starts chasing. So when people start chasing, that's the silly crowd, right? That's the retail crowd. And the breakdown phase happens when price tends to give some back. It's the cycle of supply and demand. It's the cycle of accumulation and distribution. Okay. And so that gives smart buyers a chance to get back in for an accumulation cycle. But we have a chance to get in, see direction, get out, see direction, right? Those are the 4 phases. And this rinses and repeats. Now, these 4 phases you can see play out on a bunch of time frames. Here's a 5-year chart of Amazon. You can see it look exactly like that market cycle. And this also happens on shorter time frames as well. Here's a 30-minute chart zoomed in on Amazon. Check this out. It seems like random price movement, but it's really not. This is actually just quants and algos running market cycle patterns all day long. Accumulation, breakup. Okay, distribution, breakdown, accumulation, breakout, distribution, breakdown. And this process repeats over and over again, right? And I think we can agree here, maybe you don't believe this, but I certainly do. Wall Street and insiders control price action. There's a lot of manipulation. If you don't believe me, look what happened last week on Friday. Out of nowhere, the market moves 120 points. We knew there's a major catalyst, but that was a huge concerted effort to move the market like it did. So I think we can agree there's a lot of price action control going on. Which means that Wall Street isn't sitting around manually doing this stuff. Okay. This is like just a full-on go button or full-on sell button. So instead, we've got automated trading software. This is Wall Street, right? Automated trading software that handles all the heavy lifting. And, quants and algos are pretty much 80% or more auto trading right now. That's what the market is. That's modern day market. And that's why this market cycle pattern plays out so consistently because it's programmed, right? It's programmed to do this. So pull up any chart, any time frame, and you can see this market cycle pattern, supply and demand play out over and over again. Here's Meta on a 15-minute chart. Exact same thing as we saw on Amazon on a 30-minute chart or a 5-year chart. Accumulation, breakout, distribution, breakdown, accumulation, breakout, distribution, breakdown. Again, again, again. So these 4 phases are the core, the foundation of the pinch point scanner. This is what we do. I'm looking for stocks at the end of accumulation. I'm looking for stocks at the end of distribution. So when they're coming to an end, that's when I want to be in the trade, right? I want a chance to participate in that breakout. I want a chance to participate in that breakdown. That's what the pinch point scanner is. That's how the go filter is recognizing these trades. So it's at the ends of these cycles when the energy has to go somewhere. That's what it's designed to tell us. Okay. And so it's looking for stocks that have spent an abnormally long time coiling in an accumulation or distribution phase. And I'm talking like literally weeks or even months of accumulation, okay, or distribution. And that's where we get the proprietary get, set, and go. That's what I like to trade. I like the get sets at the ends. I like the goes all the time. If they price out the right way, I like the goes all the time. So the get ready, get set, if it's pretty early in, if we've only been in for a couple of days, maybe that's not enough for me to say like this is a great looking trade. But if we get towards the end in the go filter, that's energy that's going to have to go somewhere in the markets. Okay. When the stock is tagged go, that's what we've been waiting for. That's the rare window that I call the pinch point. That's when the moves get really explosive. And this is when things get very one-sided. And this is very favorable for us. So AES, a utilities company, same type of thing, trading between like a 50-cent range. The stock's super ugly. Stock's down 27%, but it didn't matter. On May 5th, pinch point scanner flagged it as a go. We've got a coming move. Let's see what's going to happen. So we're trading in about $1 range and tighter until when? It's a perfect pinch point trade. It's forced to give us a direction. Now, I don't care if the market's going to drop this thing $2 to $3 or rip it $2 to $3 to the upside. It doesn't matter. So price is forced to go somewhere. And that way the stock spends weeks and weeks, even months building this pressure. And we have these chain reactions that's either, a stop loss cascade where things just fall to the downside or a short squeeze covering where things rip to the upside. And so what happens is when shorts are forced to buy back their shares, they get dumped out of positions for, prices are going higher than their shorts. Then they flip and they buy. They're forced to buy those shares when this thing takes off. And that's why those squeezes happen. And it's really parabolic. Okay. Or a stop loss cascade is when bulls lose control and they're forced to sell when prices breaking key support and they dump to the downside. So again, this is all about supply and demand, but those explosive moves higher or lower is what the pinch point scanner is designed to find. So AES on the go filter, you can see the energy is coiled right there. And what happens? Stock breaks out, breaks all those highs. Short sellers are forced to reverse and go the other way. The underlying goes up about 20%. And we get this nice one-sided parabolic move higher. Okay. 19% move in the underlying stock in just 6 days. Now, the best part is because there's virtually zero interest in this flatline stock as it's range bound for about 50 cents, the stocks are dirt cheap, which means they have a big payout. Okay. 325% with that big change in the underlying. Imagine that like price is dead for 50 cents and all of a sudden it rips up 20%. We want to be in that trade prior to when the thing takes off. So that's a great gain. So turning $1,500 into $4,875 in just under a week. Again, this is why my scanner is looking for about 10,000 stocks and ETFs. You can find pretty much anything in there. And what I'm looking for is a tightly wound pinch point every single day. Okay. 3 days later, it happened at Cheesecake Factory, a stock that's either on or off your radar. We actually looked at it yesterday. Somebody brought it up yesterday in my session as well. Same setup. Okay, it's coiled. We're ready to have some type of movement, and it pops up in the go filter. We're gonna get some direction. Pinch point scanner gives you the price action, stop loss, and take profit, the expected ATR, and the option trade to use in the expiration. Nearly a triple digit gain in 4 days. That's nearly a double. Okay, so from a boring stock that most people haven't looked at, that's what I love about pinch point is these are some stocks that I haven't looked at in ever. Some names I've traded, I've never even traded before, but it's a great trade. It's a great technical trade, and it's just a trade. But it's nice to have a winner 83% of the time. Okay, and these stocks don't cost a lot to get in, right? AES was 55 cents a contract. Cake was 75 cents a contract. I mean, think about defined risk. If the most you could lose is 55 cents, I'll take that trade. If the most I could lose is 75 cents, I'll take that trade. Right? Pretty good. So whether you have a small account or big account, it doesn't matter with pinch point scanner. I want to remind you that, of course, not every trade is going to work out. We are going to have some big wins. We're going to have some small wins. And yes, we will have some losers. Okay. We've had, of the 40 trades we've taken, I think we've had 24, 25 winners and 4 losses. So that's trading. Okay. But we're never going in on a single investment. One trade does not define our wins and losses. One trade is not the reason we can, be rich or be broke. It's just a trade. So never risk more than you can afford to lose. This is risk capital. So let's take it up a notch with pinch point scanner. We also built in a zero lag momentum oscillator, which helps us spot the nearest term and highest probability direction. Okay. So if we're looking for a direction for the stock to go with the pinch point scanner, the zero lag momentum oscillator would give us a likely up or down direction. So if you want to trade just a single direction, get a little bit more bang for your buck, you play that edge. So this is zero lag, which is good because that way it immediately tells us when the stock is confirming a move right outside that pinch point. So if we got the coil, I'm looking for that oscillator to give us a chance to confirm that we're going somewhere, going up, going down. Okay. All right. I just, and in fact, just side note here, I had a question yesterday. Somebody asked me, Chris, I saw that one day it said break up, the next day it said breakdown. Well, there's clearly like, if you think about like an indicator based move, it's like if we're at like the threshold of whether it's confirming up or down. I mean, price in the oscillation, it might take like another push in price to then drive that thing into a confirmed breakup, right? So I mean, within reason, what I want here is coiled. I want coiled number one. I want pinch number one. And then a breakout direction is fine. That's the probability to throw on top of it. But my favorite thing is just finding a good coil trade. I can do a lot with just coil trade. Okay. So we're looking for breakups or breakdowns. It's right there in your scanner. So it is pretty simple to follow. And again, the whole thing, if you look at it, it's pretty intuitive. And as we've seen this year, as we've seen most of the time, stocks tend to fall a lot faster than when they rise. As they say, bulls climb stairs. I like to say that bears jump out of windows. So when the opportunities come to the downside, you'll see that, it's like Worthington Steel, way faster to the downside. We're pinching tighter, we're coiled, the energy's there, consolidating for over a month. And then there's no major news. It's range bound, nothing really happens. And then pinch point scanner flags Worthington Steel and a go filter. It's got a breakdown set up for direction. We're confirming that break just below the pinch, and just like that, off a cliff, this thing drops like $12. Okay, 261% gain in just a couple of days with this boring little coiled stock that paid out huge, right? And we're in this trade before that breakout happens. You're not chasing that direction. You're already in the trade. So $1,500 turns into $5,415 in less than a week. Is this retirement overnight money? No, not really, right? But it's enough to maybe take your friends out to the golf course and treat them to a drink or a snack at the 19th hole and still have some money left over to grow your account, to enjoy the process, take good trades. Bring me the next pinch point scanner trade. Next one on Walmart. Okay. Walmart was in full breakout mode. This thing was crazy in 2024, literally going nearly parabolic. You thought, okay, the stall happened, the stock kind of died around 95. You're like, there's no way this thing can go higher. But we're trading at like $92, $93. It's range bound. It's coiling. Pinch point scanner flagged as a go. Now this is interesting. It's flagged it with the zero lag momentum oscillator as a break up. Even though the stock had already been up $10, $20 for the year, it still flagged it as a break up in momentum. Okay. So again, follow the rules, follow the process, stop loss and take profit based on the expected range. Go out 4 to 6 weeks in expiration. What do we have on Walmart? Walmart skyrocketed all the way up through $100. So even though it looked like it couldn't have gone any further, it did. It ended up breaking up $100. Another 88% gain on Walmart. So as exciting as that would have been, pinch point scanner continues to get better and better because, again, we're scanning for thousands of stocks. We're looking for the best conviction pinch setups. And this is spoon fed to us every single day. This is why I'm running the masterclass this week, because I'm happy to see we have 18 stocks in our go filter. I want to look and see how many of those can we trade. Okay. So if you click the trade idea button, what that looks like is the automated alert that the pinch point scanner algorithm will generate for us. So it looks something like this. You've got a paragraph describing the trade. You've got the suggested strike price and the expiration, the options trade, what the expected ATR is going to be. And you can follow that along too. Just simply buy a put or buy a call. If it's directionally up, you buy a call. Directionally down, you buy a put. I like to go a little bit more advanced to that. That's why I'm offering, the alerts on top of this, because I like to trade it both ways. But I will also take a directional trade. We've done that many times in this service. But anyway, the scanner and the algorithm give you everything you need to place a trade. So whether you're looking at what's coiled, is it a breakup or breakdown, and then what you have for the expected move, stop loss, profit targets, the option criteria if you want to buy a call or buy a put. So everything you need to pretty much focus on a nice pinch point trade and hopefully another win. SOLV, healthcare stock, popped up in the go filter. Perfect pinch setup. It's coiled into like a dollar range. And if you want to take the trade, click on the trade idea, take a look at the paragraph, strike price, expiration, what we're expecting on the daily and monthly move. The option trade is generated on the spot for you. That's what it looks like from stop loss, take profit. A buy call option is defined risk anyway. What happens? SOLV underline moves up. We have about a $10 to $12 move after going into a dollar range, rips up $10 to $12. It's another big winner, 163% with pretty cheap options. $500 investment into SOLV shows 13.15 after a winner. So take the family out for dinner, tip the waitress, and have a few bucks left over. Okay, pinch point scanner to the downside. It absolutely works to the downside. Prices go up and down. Here's Core Scientific, a Bitcoin mining company, coiled like 50 cents. Okay, pops up into the scanner and the Go filter in a breakdown setup. You can have the option trade given to you right here. No guesswork. Stop loss and take profit. Define risk. Boring stock that hasn't moved in weeks. It's coiled and perfectly set up for us. And it drops $3 in the underlying, which is like a 30% move in the underlying stock and a huge gain. 265%. Not bad. Okay. $500 into that CORZ trade was $18.25 in less than a week. You want to, risk a little bit more. $2,500 into that trade was over $9,000. Okay. So is that life-changing money? Yeah, maybe. Maybe it's not. It doesn't matter, but it's a good trade. And that's what I'm here to do is just, if I can help you find good trades, pinch point scanners here to help us find great trades. Let's take them. I think it's enough to move the needle and grow your account. I think it's enough to do the right thing and focus on a process that's going to work and find trades that are likely going to give us direction. And we're not chasing our tails. Get some wins, catch up on some bills, replenish some savings, surprise the family with a weekend getaway. Okay. Again, one high conviction pinch play. So I'm hoping that you can see here from all these examples, and obviously jumping into my workshop series this week, 3-day masterclass. Pinch point scanner is a fantastic tool. Okay, there's no download required. You've got the dashboard. You can search for your favorite watch list items, or just go right to your Go filter and see what's actionable. Okay, that's the stocks I want to be trading, and then I'll widen out from there and go into the get set, and I'll verify like how long has the stock been coiled, how long has the stock been pinched, and the automated alerts will be spoon fed to you if you use a pinch point scanner. Okay, so nearly 10,000 stocks giving you only the best setups. I'm not interested in what stocks are doing in a mediocre setup. I want great setups all the time, and that's pretty sweet to me. So it's virtually giving you picture perfect pinch point trades every single day. And what comes after those pinch points? Explosive parabolic moves, one-sided direction. That's perfect. Direction is what we want. Direction is what we get. Here's one on Verizon. Pops up in the pinch point scanner with the Go filter with the breakup. We're coiling again like under $1. And what happens? Underline goes up. Follow your options alert with the automated algo and pinch point, and goes up. There's another like 8 to 10% move in the underlying, changes the entire options profile, and we get paid pretty well. 137% of Verizon in just 8 days. So, the opportunity is this. It's like you're just getting good trade after good trade after good trade. So that's the hard part. How do you find a good stock? How do you find a good trade? Pinch point scanner helps. Okay. So on the average, if I've got 18 stocks this week that we can price out, I'm certainly hoping we can find 2 to 3 trades that will price out the way that I want. Okay. You don't have to wait days and days and days, weeks to get your first trade. If we set it up today, this 3-day workshop, I'm planning on placing some live trades with you. Okay. Hopefully our next couple of trades we take are going to be winners. We'll keep winning at 83% or so. All right. So I look at it this way. You have 2 choices. You can just chase the market and wonder how scary things are going to get. You can see what Trump's going to say, what he's not going to say. What about Bessa? What about Fed? What Fed Powell? Doesn't matter. I'm telling you, all this on again, off again. It's all noise. Highest valuation we've seen since .com. It's going to be the biggest recession whatever. Maybe it is, maybe it isn't. But you can't control this stuff. All you can control is your risk and the trades you take. Okay? So option number 2, I think, is a better option. That is, leverage the only system that I know of that's designed to help you front run these explosive parabolic moves when they're coiled and pinched and ready to go. Direction is right around the corner when you get a pinch point setup. Okay. This is why we're scanning thousands and thousands of stocks, because we'll find the ones that are likely going to be moving. Gains like this are not that hard to come by. 30, 40, 50% triple digit winners on pretty cheap options. So after watching, countless traders hit some major milestones with my various strategies, I think the pinch point scanner is a lot of fun to have a tool that gives you great trades with direction right around the corner. And if you're tuned in, join me, right? Pinch point scanner, 3-day masterclass workshop, trade live with me this week, Tuesday, Wednesday, Thursday. Let's get into the trenches together. I've got a get it started guide on pinch point scanner on how I use it. Okay. The video series on what I like to look for. There's like a whole education guide. I think it's like 6 or 7 videos as well as a PDF. There's no install needed. Everything is on our website that we host. We just give you an access token for it. In just a few seconds, literally, you can search your favorite watch list items or go straight to the Go filter and see what's actionable. Our customer support team is standing by to help. Once you have it all set up, like I said, because we're talking about it right now, I will be training you on how to use it. Tuesday, Wednesday, Thursday, 3-day workshop, masterclass series. Let's teach, let's trade all week. Okay. All right. We're doing that live today at 1:30 p.m. And I'll be looking to trade as well. So I'm just scratching the surface here what the pinch point scanner is capable of. It's essentially spoon feeding you great trades. So check this out. When you click on the expect button, so you can find your trade, whatever filter you want. It's a get sets and goes. You can click on the inspect button or the trade idea button. You're also going to see some price charts in multiple time frames. You're also going to see, kind of the volume profile where you can gauge the firepower behind these breakouts. And we'll do this all again in the masterclass sessions, and also see, is this thing pinched and coiled and ready to go somewhere? So to me, this is a pretty accurate prediction system. These are finding trades for us before prices get all exciting, right? This is getting prices for us or getting trades for us before the options market has to change by 10, 20%. Let's get into these trades a little bit earlier. Let's give ourselves some time to give direction a chance to go. Okay. And again, I'm going to sit you down in class and coach you on how to use it and how I trade it. Now, the publishing team want to put this whole package together for $39.95. We spent six figures on the data for these scanners and dashboards, and I get it. And plus, with me trading with you, stuff like that, I get it. Whatever. A la carte, $39.95. Okay. Now, that's for 1 year of access to pinch point scanner. Okay. And I don't think that look, I've not seen pinch point scanner anywhere else. So I think that it's fair considering the model portfolio is up almost $21,000. So it's a fair assessment. Gives you lots of trades to choose from. You get 2, 3, 4, 5 trades a week minimum that we can trade, and they're prices that are likely going to move. So we've got good opportunities on a daily basis. But here's the deal. Okay, because you're in this webinar, checking out this session today, and if you want to get into my masterclass today, $39.95 is not going to be the price of this pinch point scanner. Okay, we're going to slash $2,000 for a member discount. Okay, so that brings us down to $1,995. That's for the first year of pinch point scanner, and it could stay there. It's not going to go up if you lock in a price at $19.95. And for more traders coming into today's class and this week's masterclass workshop, 50 traders in the door will knock off another $500. So now the pinch point scanner for the next 12 months is $14.95, and you can lock this price in. Okay, now. If 50 traders come in and I've got 50 plus people in today's classroom, that's fine. I know the price is going to go back up $500 by Friday. So when those 50 spots are gone, price goes up, enrollment shuts down, and by Friday, the $500 little bonus is gone. Okay. Now that's the lowest price we've had for the pinch point scanner. You get the early bird founding member discount and the extra $500 off. Okay. And trading with me all week long, today, tomorrow, and Thursday. So links coming in the chat here in just a few minutes. This is a limited deal for 50 traders. And spots will fill up. I'll probably have 100 plus people in the room today. Let's go ahead and drop that link. ProsperityPub.com/pinch. ProsperityPub.com/pinch. If you want to give our team a call, 904-70